What's going on, investors? My name's Emmanuel, and I think I may have just invested in the next 10 bagger company. This is a company that I believe will 10x, 10 times my money within the next few years. And the company that I am talking about is ChargePoint. The ticker symbol is SBE. Now, I'm so confident that this stock will 10x my money within the next few years because I am investing in what I believe to be the axes and the shovels and not necessarily the gold. If you go back to the California gold rush, the people that actually became very, very wealthy were not the people who were digging for gold, but were the people who were selling the axes and the shovels to the people that were digging for gold. And this is what I believe ChargePoint is right now in 2020, because there is an incredible rise in demand for their products and their services, not just in the United States, but also all across Europe, and it's spreading to places like Canada. But even more so in the UK, because this week alone, the government has recently mandated the needs for the products and services that ChargePoint supply, and I'll touch on that in greater detail later in the video. But also, some additional news regarding ChargePoint also was released 2 days ago, involving them securing an exclusive partnership with another major blue chip company. And this is an absolute game-changing partnership. And as a result of this new partnership, the share price did take off 2 days ago. It finished over 7% and it was up again just yesterday. So I definitely need to bring this company to your attention. So in today's video, I'll be taking you through the company profile of ChargePoint, detailing what products and services that they provide, as well as how they generate their revenue. I will show you the rising need for their products and their services, as well as how the recent UK government and also the Canadian government mandate plays a huge role in massively benefiting ChargePoint in the future. I will show you who they just secured an exclusive partnership with and how I think this changes everything going forward, as well as I want to dig deep into some of their pre-existing partnerships and how it all ties up and comes together. Also, we'll take a look at their financials and also their forecasts, look at their balance sheets, and lastly, I will tell you what my plans are for the stock and how I plan to load up on shares. So you have all of that to look forward to in this very video, and we do have a ton of information that we need to get through. But right before we jump into it, please don't forget to absolutely destroy that like button. It lets me know that you enjoy this type of content. And if you are new to the channel, go ahead and hit that subscribe button to stay up to date with my latest stock analysis content, all the stocks that I buy, sell, and all the stocks that are currently on my watch list. So ChargePoint will be going public via a merger with a special purpose acquisition corporation called SwitchBack Energy, and the ticker symbol is SBE. Now, before you say, Emmanuel, not another SPAC, please hear me out on this one. And yes, look, I'll be the first to admit that we did get in way too early with Tattooed Chef. Of course, with the benefit of hindsight, we jumped the gun. I'll admit that it was a mistake buying pre-merger, and we should have waited to buy post-merger. Do you get what I'm saying? But if after you've heard what I have to say regarding ChargePoint and you do decide that you want to actually wait until after the merger, then that's 100% completely understandable. I respect that. That's your decision. That's fine. But ultimately, don't let the past wounds prevent you from missing out on another opportunity. All right, so I'm glad that we cleared that up. We addressed the elephant in the room. So let's head back to ChargePoint. So ChargePoint was founded in 2007. So it's by no means a brand new company. And it was founded as an electric vehicle infrastructure company, and they specialize in building a network of electric charging stations in the United States and all across the globe, including Europe and the UK. Now, they predominantly have 3 lines of businesses, or 3 main streams of how they generate their revenue. And number 1 is through the selling of their hardware. And to date, they have over 118,000 charging stations in operation right now. And they are currently dominating North America as we speak, and have expanded rapidly into Europe through manufacturing and selling their charging stations to their customers. And these also include third-party buyers who pretty much purchase their hardware and place their brand on the ChargePoint charging stations. And I'll roll you a clip to show you exactly what I mean. ChargePoint. Taking over. So look, I'm not going to lie, investors, I was really impressed when I did a Google search for ChargePoint stations on their website and found that they had actually expanded into my area. Now, I live in Northampton, which is a town, it's pretty much a village. And you would expect ChargePoint to already be in the capital, which is London, which they are. For them to be in rural areas like Northampton, I was really impressed. So their second stream of income is through the sales of their software that's actually needed to run their charging stations, as well as the warranty for the parts and also the labor, the installation. Now, this in my opinion is brilliant. They are operating a SaaS business model, which is also known as the software as a service business model. And that will pretty much provide reoccurring revenue for the company via subscriptions that will allow customers to use their software. Now, I've already said in previous videos, I'm a huge fan of this business model because of the reoccurring revenue. And you know, the likes of Adobe, the likes of Microsoft, even Neo with battery as a service, they have really demonstrated the power of this type of business model and the benefits of reoccurring revenue. Now, their third line of business is also ChargePoint themselves as a service, and that includes further support using their hardware and also using their software services. So they offer these products and services to three categories of clients, and that ranges from commercial, which includes your places of work, your commercial properties, you know, your educational locations like schools, universities, you've got hospitals, fueling stations, and many more. You also have the fleets, which include delivery and logistics, sales and services, and multiple shared mobility. So think large industries. And lastly, you have the residential side, which includes single families, you know, your multi-families or multi-lets as we refer to them here in the UK. And those are their clientele. But before we move on, slide 17 actually breaks down how they fuse all of their services together and the benefits it provides the company, which I've already touched on. But it's definitely worth looking at in great detail when you're doing your own due diligence. So definitely check it out, slide 17 on their investor presentation. So now we have a greater understanding of the company. We know the different types of services and products that they provide. We have also identified their three main types of clients and customers. Plus, we have also identified exactly how they generate their revenue. Now, I hear you say, okay, Manuel, that's great. What's the opportunity? Now, let's take a look. In the UK, the government recently brought forward their plans to completely ban the sales of new petrol and diesel cars from 2030 under the PM's Green Plan. Now, it was originally meant to be in 2035, but the government have decided to change their plans, and with that, they have allocated £4 billion to the move. But more specifically, the UK government have allocated £1.3 billion to be invested in, you guessed it, the electric vehicle charging points as part of their new plan. Now, I wanted to dig deeper and I wanted to find out which EV charging companies own the largest EV charging network in the UK as of this year, as of 2020. And according to autoexpress.co.uk, that tracks the performance of cars in the UK, Tesla is of course in first place for obvious reasons, but in second place, you have InstaVolt. Now, InstaVolt themselves do not build their own charging stations, but they are in fact the suppliers, they are the middlemen, because they purchase their charging stations and use the software of ChargePoint like you saw in the video, and I'll put a picture up again. ChargePoint is labeled on all InstaVolt charging stations. So this is a massive opportunity for ChargePoint investors, especially as the UK have moved forward on the ban of the sale of petrol and diesel cars within the next decade. And it's not just the UK. Other large European countries like Spain, like France, have also mandated a ban of sales of petrol and diesel cars. And they have also allocated billions and billions of fundings towards the infrastructure and the development of EV charging stations. Even Canada has also projected the banning of the sales of petrol and diesel cars by 2035. So investors, this is really happening all across the globe. InstaVolt and all the other brands that purchase from ChargePoint will benefit greatly for the push for a greener economy. And that simply means more revenue for ChargePoint. So I hope you've grasped the scale of this opportunity. Now, before we jump into the company's financials and also their projected growth, I want us to take a look at who they are currently doing business with. Because like I said, they're not a new company. They do have pre-existing partnerships and also new partnerships. But I think this might actually really impress you. So ChargePoint boasts global established partnerships with massive names within the tech sector, the automotives. They have partnerships with people in the energy, oil and gas, even the fleet market. They have partnerships in all of those sectors. But let's dive a little bit deeper and touch on a few. So Shell, for example, one of the biggest names within the energy, oil and gas sector, launched their new motion campaign, which essentially involves the installation of charging stations at all of their fueling stations. So it's a smart move from Shell, and they've realized, look, this is the future, whether they like it or not. But with their move, they're also providing charging stations for home, for places of work, for businesses, etc. However, Shell have also recognized that ChargePoint has one of the single largest EV networks with, again, over 118,000 current stations and counting. And therefore, they struck a deal with ChargePoint that will enable customers to essentially tap into ChargePoint EV networks without the need to create new accounts, ensuring a hassle-free and charging experience for drivers. Now, I don't know about you investors, but this shows me the amount of value ChargePoint's reach and its network is for companies like Shell to want to do business. But I hear you saying, Emmanuel, look, that's old news, because that's a pre-existing partnership. We want to know the new stuff. Well, how about this? Their most recent major partnership was with none other than one of my favorite companies of all time, Apple. And the headline reads, Apple and ChargePoint team up on electric vehicle charging info. Electric vehicle charging network ChargePoint said on Tuesday that it will team up with Apple Inc. to integrate a wide range of EV charging information in Apple's CarPlay infotainment system. EV drivers will get hands-free access to such information as the location and the status of the charging stations on ChargePoint's mobile app on the CarPlay cockpit display screen. The app also will enable drivers to navigate to the nearest charging stations and to start a session, as well as ascertain the speed of the charger, the cost, availability, and the plug type. Now, I read up some more information regarding this partnership, and not only will it do all of those things that it mentioned in the news article, but it will also enable EV drivers to join a waiting list for that particular charging station. So if the charging station already has people booked in for it, then you literally join a waiting list through that network, which I think is incredible. Now, if you're not familiar with Apple's car keys and the CarPlay system, it essentially will enable you to use your iPhone as a new sort of digital car key. You will be able to unlock and start your car with your iPhone. And I'm not even playing. That's crazy. Plus, the CarPlay integrates your iPhone's functionality to the display screen. Now, I say that to say this. Apple has partnered with every major car manufacturer to support the CarPlay system, which will soon have access to ChargePoint's network. So every car manufacturer with CarPlay will be able to find suitable ChargePoint stations seamlessly, effortlessly. Game over. I wish I could actually pick this mic up and do a mic drop, but I'm not going to do that. But that's not all, because ChargePoint are also embedded with the likes of Ford, Volkswagen, BP, ExxonMobil, Nissan, Alphabet Inc. with the Google Maps, and many, many more big names within the industry. And majority of these partnerships are primarily for the access of ChargePoint's massive network that they have spent building since 2007. All right, so now we've established their partnerships, let's take a look at their long-term financials, because we need to see the numbers. And for full year 21, they anticipate revenues to sit at $135 million with a gross profit of $33 million and a total operating expenses that will exceed revenues at $140 million. And the adjusted EBITDA is minus $97 million. And if you look at their revenue projections for the next few years, they are expecting a compounded annual growth rate of 60% from 2021 to 2026, which is incredible. And if you're thinking, okay, how can this be attainable? It's a bit unrealistic. 60% annual compound growth rate. It's a bit crazy. But remember, their growth is directly correlated to the growth of electric vehicles in multiple countries all over the world. And remember, their revenue streams are not just limited to just commercial or fleet customers, but they also provide services for residential customers, meaning the more people begin to switch from internal combustion engines to EVs due to, of course, government mandates, the more the need becomes for them to access charging stations, maybe at their house or maybe at their workplace. I mean, pretty much almost everywhere. And that growing demand will mean growing revenue for ChargePoint. So I suspect that they will be able to meet that compounded annual growth rate and possibly even exceed that with the demand of EV. Now, let's take a look at their balance sheet, and I must admit, it doesn't look too bad at all. As of January 2020, they have total current assets to the value of 190 million and total current liabilities of only 90 million, with cash and cash equivalents of 120 million dollars. Now, we of course have no previous financials to compare it to until the merger is actually completed and when they submit their next financials. And we can't conclusively say whether these figures have been on an incline or whether they've been declining over the years. Remember, they've been established since 2007. And therefore, that does make investing in this company pre-merger very, very risky. And on that point, I want to let you know what I am doing with this stock, because I already started a position on Monday and I did add to my position on Tuesday when Apple announced the partnership. I will say, investors, it is a very, very small position because, again, it is a SPAC. And like I already addressed the elephant in the room, we have seen the huge sell-off that can occur once the merger of the SPAC is complete. So I do suspect there'll be more buying opportunities post-merger. So it's a very, very tiny position at the moment. I only have 100 shares and my average price is $18.89. And I do want to build this position to over 300 shares, but I am prepared to wait till after the merger because I do want to analyze the balance sheet. And once I have that, then I'll feel more confident pumping more money into this company. I have learnt my lessons from jumping the gun and I will be more patient this time. So there you have it, investors. That's my view on ChargePoint. I'm really excited about this company and also its future prospects. I do believe the global push for greener economies will accelerate ChargePoint's growth and also their revenues. And I do believe 10 years down the line, we will be glad that we got way ahead of the curve and way ahead of Wall Street. And those are my thoughts. Please let me know what you think and also let me know your current positions. Are you already invested? And if you are invested, what is your average price and how many shares do you have? Or are you planning to wait until the merger is complete? Wait for a buying opportunity if there is a dip post-merger? Whatever it is, let me know what you plan to do in the comment section below. And that also reminds me, I am planning to drop a Discord group very, very soon. Please stay on the lookout for that. But when it's all said and done, make sure you do your own due diligence and your own analysis before you decide to invest in any stock or any company. Remember, I am not a financial advisor, so please view my content as purely educational and not investing advice. And if you do want to learn about investing in stocks, there are some useful links in the description below. Please check them out. There are also some really good books that I highly recommend. So with all that said, don't forget to smash the like button if you took some value from today's video. Hit that subscribe button and the notification bell if you want to see more content from me. Thank you so much for watching. I appreciate your time and I will catch you in the next one. Peace.